साथ दे रहे हैं हम और हमारी न्यू एज बैंकिंग सर्विसेज यूनियन बैंक ऑफ इंडिया।
Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets attempt a recovery from the lowest point of the day. The Nifty falls below the 12,000 mark. Most sectoral indices trade with losses. The Nifty Metals Index is the top sectoral loser after tariff wars re-emerge. Most of the constituents are trading with cuts. JSPL falls over 10% in intraday session after the Supreme Court has refused to grant JSPL any relief on the end use of the iron ore extracted from Sarda Mines. And Bharti Infratel is the top loser in the Nifty, falling the most in a month. The stock is now down for the second straight day and also trading below its 100-day moving average. Good afternoon, Nivesh. That psychological mark of 12,000, we've breached that after, I think, 5 to 6 sessions.
Yeah, and banks are leading the charge downwards, which is not pleasant either. Yesterday, the banks were looking wobbly. It was only because of Reliance and Bharti that we held out. And we spoke about this yesterday on Countdown as well as the market wrap, that we will not necessarily have the two of them giving the support today. And therefore, what could happen? The interesting bit, though, was that a lot of these key banks were near key support levels. We're not quite seeing them do that, which is why the Nifty is down about 0.6%, the Nifty Bank is down about 1%. Get the heat map up on the screen and let's see what's leading the charge of the cuts downwards. So very few gainers. Keep that at the back of your mind first. Lots of losers. Now what's down? Bharti Infratel down about 9%. If recent history is to be believed, I wouldn't be surprised if this is up in tomorrow's session as well, because it's followed that pattern of crisscross. But that notwithstanding, don't take my word for it. For now, it's down about 9%. Commodities have cracked today. Tata Steel, JSW Steel, Vedanta, Grasim, Hindalco, all of them are down in the session today. There is weakness in Adani Ports. Well, the Adani Group stocks today, I think as a pack, are seeing some bit of profit booking in the session today. Yes Bank and Z continue to slide. So Yes is down 5, Z is down 4% as well. I could go on because a clutch of these banking names are down. And by the way, Reliance is in the red today, down about 0.5%. Bharti Airtel 2 looking slightly wobbly in the session. So 2.5% lower. So all in all, almost all the usual suspects which have aided the rallies in the last few days are seeing some bit of pullback. Devina, what about the broader end of the spectrum?
Well, just like the large caps, a slightly more amplified version of pain in the mid caps and small caps. So mid cap index is down closer to 1%, and so is the small cap index, which is looking weak this afternoon. Stock specific moves then, and just quickly highlight them for you and what's happening thereabouts. So stocks in focus include the likes of a Prestige Estate, which still is going great guns. Stocks up about 9% in today's session. Continuous gains for an Inox win in today's trade, though not as much as 9 or 10% that we've seen in the past, but the stock's still in the green in a falling market. That's down up about 4%. Max financial services, then you've got Max Ventures, Max India. All of these Max Group stocks are very active since the last week or so. So watch out for all of these names. Losers in trade include the likes of a Vodafone Idea after seeing that big recovery, some profit taking off the table along with the other telecom stocks. Dish TV continues to grind and reel under pressure. 12 rupees on the stock now, is down 9% today, and no relief for JSPL from the Supreme Court, and that stock's taken a plummet of about 7.5% on the back of that. Profit booking in some of these bigger names. Adani Transmission finally gives back. 5.5% lower for Adani Transmission. Adani Green is down another 5% after seeing a day-on-day gain in all of these counters. HFCL yesterday's big mover, which was up about 11 to 13%, I think, by the end of the trading session. Today sees a profit taking of about 7%. And stocks that are gaining on the back of some volume activity includes the likes of Sarda Cropchem, which is up 54 times, and Rupa, which is up in volumes by about 47 times. I just want to actually just quickly pull up the intraday chart of Polycab as well, because we were just before the show started having a look at it, consolidating somewhere around 957, and now at record highs for the stock. It's actually moved up to closer to about 975 odd. So that stock is something that you need to watch out for. There you have it, almost 4% higher. So it's 972 on an intraday basis. Just the last few minutes is where the action came in. But what's been happening in the futures and options space? Namni joins in to highlight that for us. Namni.
Thanks for that, Davina. Well, no major positive cues coming in from the derivatives market. In fact, some levels being breached. Nifty's breached its 20-day moving average in trade of about 11,972. We are right now trading around that mark. So it becomes important to monitor whether the closing comes in above the 20-day moving average. And of course, the major psychological mark of 12,000 is already been breached in today's session. And as we speak, there is build-up seen on the short side on Nifty futures. Our open interest is up about 7%. For Bank Nifty futures as well, we've seen build-up coming up on the short side. However, the premium as compared to yesterday's closing premium has gone up to about 90 points. I think yesterday it was somewhere about 45 to 50. But volatility is back in the market. Around 12:30, India VIX was up about 12%. It touched levels of 16.3. That's the day's high. Now look at that. Again, from those levels, it's cooled off quite significantly at levels of 14.14. What levels then you should watch out for? In fact, as we breach the 12,000 mark today, the put writers of that strike, they have run for cover, which is not a great sign again. So that's the 12,000 call, which is seeing a fresh writing in today's trade of 22 lakh shares, and there is unwinding on the 12,000 put, shedding about 1.6 lakh shares. Remember, we were mentioning that the bulls will try to defend the 12,000 mark, but that's not happened today. In fact, we've also breached the 20-day moving average. So the base has gone lower by 100 points with today's correction. So now we will be watching out for that 11,900 on the downside. In terms of individual stocks, NMDC is of course bucking the trend among the metal stocks. So both price and open interest action seen. The stock is also trading above all its key moving averages. We are witnessing long positions here. Bharti Infratel, we've been talking about it. It slipped below the 100 DMA. And on the future side, the plate will just come up on your screen. There are signs of at least fresh build-up coming up for Bharti Infratel. And Jindal Steel, short positions are clearly visible. In fact, I was just looking at the data closely. Some concentration risk, of course. 30% of the total open interest is just with 4 clients. So telling you, maybe the traders were watching out for today's Supreme Court hearing verdict as well. Now that's been moved to January. That relief, what traders were expecting, has not come by. And finally, watch out for Yes Bank. Yesterday, the total open interest as a percentage of MWPL was nearly 91%, and for a stock to enter into the band, it needs to breach that 95% mark, which as per the current futures and options data, it has already breached the mark of 100%. So let's see whether this one goes in for ban or not.
Let's begin with the market voice. Raj Mehta of PPFAS Mutual Fund joins us right now on the show. Raj, good having you. Thanks much for joining in. You guys have this option of investing both locally and globally. Looking at the current context, where is it that you're finding the possibilities of a bigger bang for the buck? Is it in the local stocks or the global names?
So there are select opportunities available in both the markets. But more so in foreign markets, we are finding some technology companies which are available at reasonable prices and growing pretty well as well. So and in India as well, we have been finding select opportunities in very select pockets. So we don't have a market view as such, but select opportunities we are finding and deploying our funds.
Okay, so how much is the concentration right now in the equity fund, for example, in local versus global? And if you've not exhausted the limit, would you look to up the allocation on the global stocks currently?
Yeah, so current allocation is about 65% in Indian equities and 30% in foreign equities. So we have a sectoral limit for foreign stocks at about 35%. So we can go up to 35%, but we are more or less there, and there will be small tweaks here and there, but not a major change.
So what are you most bullish on in terms of, making the bang for the buck and in this current market situation, a stable portfolio is something what everybody wants?
Right. So we have been positive on private sector banks as well as autos. So over the last 1 year or so, we have seen a major correction in the autos, and there we see some major upside in the next 3 to 5 years. So from a period where we had waiting period for cars and bikes, we are now sitting at a situation where there is inventory at the dealer level, which has almost been cleared up now. But going ahead, we could see some good retail numbers as well. So we feel that it's a cyclical slowdown, not a structural slowdown. The cars and two-wheeler story is a long-term structural story in India, and it should bounce back 3 months, 6 months, 9 months. We don't know the timeline, but it should bounce back sometime next year.
Okay. We've been talking a whole lot about whether or not there are other themes that are likely to play up now. Whether you see manufacturing as a theme good enough to invest in. Commodities is a play good enough to invest in. And financials obviously holds its own stature in your portfolio.
Right. So manufacturing, again, you need to look at stocks bottom up. So some sectors might fit in our criteria. So our criteria is first we look at the management, then we look at the business quality and the competitive advantages that they have, and then we look at the valuations. The last comes the valuations. So within the manufacturing space, there are very select opportunities and select stocks that we look at, and we are finding some opportunities there. On the commodities side, we feel that it's a very cyclical space and we need to time our entry and exit very properly. So that's where we have stayed away from, because we have not been able to...
This is metal, cement and the other.
Right. So over the last 3 years, everybody has been saying that the infra spends and capital goods space will revive because of the private sector capex. But that has not happened over the last 3 years. So timing these spaces is very important, and we have not been able to, gain conviction over there. So we have stayed away from this space.
Okay. What about the pharma space? I see that you guys have exposure to a couple of pharma companies as well. Do you think the pricing pressure issue, which has been there for the last 3 to 4 years, is out of the window now? One can look at fresh investment, because a lot of these pharma companies are available at cheap valuations.
You're right. So the most of the pricing pressure is behind us, and we see that going ahead, we could see some growth in terms of the volume growth as well as pricing coming back to these pharma companies. And within the pharma space, it's really difficult to gain conviction as to which molecule or which drug would do well, because you need to really go into details as to what is the competition doing in terms of each molecule and drug, and that's why we have a basket approach here. So we have about 5 companies in our portfolio, and we have 1 to 2% allocation to each of these. So on top of this, you also have these US FDA troubles coming in every 6 months or so. So we feel that it is not a space where we can take a 5% position or a full position, and that's why we have a basket approach here.
Okay, you also mentioned 65% of the exposure is in Indian equities, right?
Right.
So majority of that is in private banks and autos, you mentioned. If I were to ask you, if you were to increase your exposure in any of these segments, which one at current valuation is giving you more comfort to buy more?
So both the sectors that you mentioned, we have been increasing exposure over the last 6 months or so. And one stock which we have added recently to our portfolio is CDSL. So it's basically a duopoly market where you have NSDL and CDSL, 2 players. It's a steady annuity revenue earning company. Where you don't need any fresh capital to grow your volume 10x or something, and they have various revenue streams. So you have the issuer charges that it earns from the companies, you have the transaction charges that it earns from the investors, and there are these e-voting fees that they earn, and there are many other revenue streams which they are earning. So going ahead also, we feel that they can dematerialize the insurance policies, the academic records, and many other revenue streams which could open for them. So we feel that it was reasonably valued, and that was the stock which we added in the last 6 months.
Similar should be the case also with, I think, asset management companies?
Yeah, so asset management companies, the problem is the valuations. So in the last 1 year or so, we have seen the valuations run up too much. So on the non-lending side, we like credit rating agencies, depositories, stock exchanges. These are the 3 spaces where we are positive on. But on the AMCs and the insurance side, we feel that the valuations have gone up too much in the last 1 year or so, and that's where we have stayed away from.
But that's also a very similar analysis to how we are viewing the polarization on the index as well, right? It's giving you returns and it's doing well for itself, and that's why it's commanding that premium.
Right.
And the stocks which are not doing well are not giving you that kind of a stock price return. So, I mean, while stock exchanges or while depositories may look good in valuations, they've really not done much in terms of the investor sentiment versus AMCs and insurance.
Right, so they haven't done that well in the past, but going ahead, who knows which sector will do well. So we'll have to wait and watch. And polarization in market is very much visible to everyone. The top 10 companies in the index have more than 60% weightage, and they have given almost 90% plus of the gains in the last 18 to 24 months. So we feel that beyond these 10 companies in the index, we feel that some companies might do well going ahead.
All right, we'll leave it at that. Thank you so very much for joining us. Really appreciate you taking out the time this afternoon and sharing your thoughts with us here, Raj. Markets then down almost 0.6% for the index. For the Nifty 50, we're down almost a full percent now for the Nifty Bank. 31,552 should actually get the MRR function going of the Nifty Bank to see the kind of moves and cuts that most of these larger names have seen this afternoon. SBI for one is down 1%. And then you have the larger names, obviously, the private sector banks also, which have not looked all that great this afternoon. ICICI Bank's down almost 1% to 506. Axis Bank's down 1.5%. Kotak Mahindra Bank is the other one. HDFC itself is down about 0.5%.
Yeah, it's looking slightly iffy for the banks, but the question mark is can they recover? And I think in a minute from now, or rather in about 15 minutes from now, we'll get in our technical experts and try and talk about some key technical levels and whether or not some of these stocks can show the bounce from the levels that they are trading at right now. What we'll try to do now is try and speak to corporates as well. I think it'll be important to address two key issues today. One is the whole conversation surrounding infrastructure and what the CM of Maharashtra has apparently told in terms of holding on to payments for key infrastructure projects, and some of the companies operating in that area might get impacted on delayed payments, if not complete stoppage of payments. We don't quite know that as yet. It's important to get a perspective there. The other one, which we'll do a bit later on, is try and get in JSPL and try and go about what could the worst possible impact be on their finances if indeed the verdict doesn't go their way. So JSPL is down about 7%. That's a conversation that will happen at 2:45. In about a minute from now, we'll try and get in Dilip Buildcon and try and figure out from them as to what is the impact, likely impact of such a move. I mean, I think a lot of people will cite economic impact of this as well, and how much would global funds think about before entering into the country if indeed such moves are done in a haphazard fashion. But there is also a business impact for some of the companies. So let's try and get in a business impact perspective from Rohan Suryavanshi, Head of Strategy and Planning. He joins us right now on the show. Rohan, good having you as always. Thanks much for taking the time out. This is Neeraj here. Good afternoon. We'll get to the a larger impact of how people would view this in a bit. First, the business impact. Which of the projects would you be present in which might apparently have a hold on payment from the Maharashtra government for the time being?
Hi Neeraj, always a pleasure to be back on your show.
Thank you.
So I don't know where these rumors have started, but as per our channel checks and everyone that we've spoken to, our clients, there doesn't seem to be any indication on that. In fact, they have told us to continue going ahead, and the payments will be done on time. And as for our exposure to the state, we just have one small project in the state, which is the Maharashtra Bombay-Nagpur Expressway. So we're doing one of the road parcels on that, and it's about 1,600 crores or so worth of order. In a total order book of 23,500 crores or so, this is roughly 6% of our order book, so it's not a meaningful listing. It's a small portion, but we do not foresee any challenge in terms of executing or getting our receivables.
Okay, so we'll get to the numbers, but Rohan, just to first get this clarification, one of the daily papers has put out this story saying that the Maharashtra CM has asked for a stop payment on all projects cleared over the last 6 months, pending further review. Doesn't mean it's been put on hold permanently, if the newspaper is to be believed, but payments on hold for the time being. You are saying that hasn't happened?
Yes, I'm saying that hasn't happened. I do not know what is the source of the news that has come, but like I said, when we've spoken to our clients, who have awarded us these projects, there is no change in what was going, and they seem to. On the other hand, they say they're very confident about us continuing the work that is going on, and they've assured us that the payments would be done.
Rohan, I'm sorry if I missed it, but out of the 1,600 crores that we were just talking about, how much of it has already been paid for and how much of it is pending payment?
We started the project some time back only. So this project, we are about 25% or so completed in that. And now, in any of these projects, you have a 10% mobilization advance that the government pays. And in this project specifically, you also had a 5% advance against equipment. So we had that 15% advance. Along with that, we also have had our regular payments. I do not have the exact numbers of how much that have happened right now. But we're in a comfortable situation. And like I said, I don't see this to be a challenge. In fact, we have made very good progress on this project, and we expect the project to be completed by next monsoons.
Okay, so basically around 200, 300 odd crores is something you've already been paid for. Closer to that.
I mean, I don't have the exact numbers right now with me, but I would assume something on that range at least has happened.
Okay, I just want to know, while we keep these projects in mind, what are the prospects of getting further orders from the government now?
See, we as a company focus on national government orders. 80% plus of our order book is from the national government across different parts of the country, whether it is the Road Development Corporation, MORTH, NHAI, or whether it is the Coal India subsidiaries. So we are focused very much on that. State government orders are few and far in between, and those are where we see, the payments have already been tied. Like, for example, in this project, the payments have been tied with SBI for specifically this project. So it's not like if these projects face any kind of challenges, it's not like that money can be moved somewhere else. It's a specific project funding that SBI has done. So they are very, very secure in that sense.
Well, we'll have to wait for more details to come by with regard to Maharashtra specific orders, the state order from this. But tell us overall, your order book, how's the execution going? Do you have appointed date for all the projects? And I believe you had made a statement in the past as well, because of extended monsoon, you would look to cut your guidance with regard to top line. So what's the revised guidance that you have?
So firstly, the order book position is very healthy. In this year, when we started out, we had set ourselves a target of winning 10 to 12,000 crores of new orders, out of which we've already won 6,000 crores plus of new orders in this financial year. And that's when the national government ordering has not really started. So in the next few months, we expect to easily fulfill the remainder of 4 to 6,000 crores of orders that we need to win. We are very, very comfortable in that sense. The good thing that's happened with our order book is that the order book is very, very diverse in the sense that we have mining orders, we have an airport order, we have specialized bridges orders, we have irrigation orders, we have 2 state expressway orders there. So it's a very diversified order book. In fact, 58% is non-roads, while 42% is in the road segment. So going forward, I see, and given the pipeline that the national government has already put out, we see, there being, benign competition and good orders that we should be able to materialize. So that's there. Now, talking about our revenue guidance, yes, like you rightly pointed out, we had sort of recalibrated our guidance given the extended monsoon that we've seen in this year. Not only did we have a very wet, rainy season, it extended all the way till November. So instead of the earlier 15% guidance, we have brought it to about 10%.
Okay.
So that's the thing. So we will be doing about 10,000 crores or so of top line in this financial year.
Okay, fair enough. Before we thank you, you guys are one of the few players who complete projects before time. As a result of that, you guys get early completion bonus. So what's the status on that? What sort of bonus are you expecting for the entire financial year?
Yes, we've been fortunate that with our business model of owning our equipment and having our own employees to run everything, we've successfully managed to get early completion bonuses over the last few years. This year, we are targeting about 150 crores plus of early completion bonus, out of which by the end of second quarter, we'd already won about 90 crores or so of early completion bonuses. So all in all, execution is going well. Projects already have their appointed dates, with the exception of one, which we will receive in the next, which we'll receive in this month, in December. So we're in a good space in that sense.
Rohan, we leave it at that note, and all the best for the remainder of this financial year. Well, that's Rohan Suryavanshi of Dilip Buildcon giving guidance of nearly 10,000 crore on the top line, which will be a growth of about 10%. And he did mention that they will be meeting the guidance with regard to order book that they had laid out between 10 to 12,000 crore. The stock, however, is sitting with cuts of about 1.5% as we speak. Well, moving on, the government is contemplating relaxing ownership norms to attract foreign investors to show interest in Air India. Shruti Srivastava of Bloomberg News joins us now for more on this exclusive. Shruti, what's the plan and how will it help the government?
So the government is discussing if it can relax rules that deal with the effective control clause. The government feels that by relaxing the particular clause of effective control, it will help the government in selling Air India, which after repeated attempts, the government has not been able to find a suitable buyer for the company, because the foreign players have been wary of the fact that despite buying stake in Air India, they may not have a say in the decision making. The government thinks that if it relaxes the clause, which is called the substantial ownership and effective control, if this clause is relaxed, it currently says that only an Indian national can own an Indian airline. Foreign players cannot have a say in that. The government thinks that if it relaxes this particular clause, maybe Air India will find better buyers and better bids when it's put up for sale. Now, government has been trying to sell Air India for the last 1.5 years and has failed to find any suitable buyer for it. The sale of Air India will definitely help the government in bridging its widening fiscal deficit. So it's one of the priority for the government if it manages to buy a suitable buyer for Air India.
All right, Shruti, thanks very much for that. So that's a story that we're going to be keeping a close eye out on. But moving away from there, obviously, just to quickly focus back onto the markets, and then we come on to the more pressing issue that's been happening with regards to Karvi and the issues happening there with Bajaj Finance, and now saying that they have a right over those pledged shares. Payaswani will be joining us in just a few moments for that. But I just want to quickly look at the markets and the broader market space, what's been moving, what's been not. So while the index itself is down closer to 1%, that's the mid-cap index, a few stocks have still about managed to do well for themselves in trade this afternoon. So you've got the likes of a Whirlpool, which is up 3%. Bata is up, so slightly more defensive in nature, but Prestige Estates now up 9.5%. Remember, Prestige Estates has been doing well ever since the announcement, of the deal with Marriott. So Mani Ceramics is up 9% today. So watch out for that one. And a few other real estate players doing okay. Oberoi Realty is up about 2.5%. And Rupa and Company on heavy volumes, which is more than 50 times the last 20 days average, is gained about 5.5%. Coming back then, Karvi's lenders are queuing up at the Securities Appellate Tribunal seeking a stay on NSDL's move to return shares pledged by Karvi to its actual owners. The move comes at a time when SEBI has mandated the clearinghouse to return these shares to its owners after Karvi used the power of attorney to move these shares into its own account. The brokerage has subsequently used at least some of these shares to raise funds via pledges. Payaswani Upadhyay, she's joining us right now for more. So, obviously there's a lot that's been happening, and now the lenders are queuing up to make sure that their interest is protected.
So
happened essentially, Devina, since yesterday is that HDFC Bank, ICICI Bank, Bajaj Finance have approached SAT to direct the clearinghouse, that is NSDL, to bring back those shares into the lender's account. And I'm told post-lunch, IndusInd Bank was also sort of joining the fray, before SAT. The broad argument that these lenders are making is that NSDL has transferred these shares from their accounts without their consent, and this is in violation of the Depositories Act. SAT has directed SEBI to hear Bajaj Finance's plea on or before December 4th, and I'm going by what SAT has held for Bajaj Finance. It's likely that the other lenders will also be sent to SEBI to make their case. The third sort of plea that has come before SAT today is of Karvi, which is arguing against the cancellation of its license, and the appellate tribunal has told Karvi to argue its case before NSE's disciplinary committee. So this is what broadly has, happened since morning today. The sense that we're getting from lawyers is, and of course, SAT has not, commented on the merits of the case. Broadly, what lawyers are saying is that, when it comes to the argument, SAT would want to look at the kind of diligence these lenders did before they, lent money to Karvi, whether the shares belonged to Karvi or not, whether it was clients, what kind of diligence did they see, a board resolution, did they see the audit committee resolution before lending this money. So of course it's very difficult to gauge any of these facts at this stage, and they will be argued before SAT. So this is what it looks like right now. SEBI on its part, the mandate of the regulator is to protect the interests of public shareholders, which it has done so by passing the interim order November 22nd and transferred and directed NSDL to transfer the shares back into the client's account. Of course, there are some lawyers who are saying, what are these lenders waiting for since November 22nd? They should have taken the action sooner and gotten a stay from the appellate tribunal, which has now said that the remaining shares should not be touched, and NSDL can't move those shares either to the lender's account or the client's account. So that's the freeze that SAT has directed. Bulk of it has already happened, but for the remaining one, SAT has given the stay.
Is there a precedence to such a case?
Not directly, Devina. The closest case that of late comes to mind is of Allied Financial Services, where SEBI took the call again to protect the interests of the investors, but left the dispute between the parties to resolve among itself, and that's what SEBI's case is before the Supreme Court. That look, I can't get into whether it was ILNFS's fault or Allied Financial Services fault. You sort it out between yourself. I, as a regulator, am mandated to protect the interests of the shareholders. And on its part, SEBI has taken, because, it regulates brokers. So it has frozen Karvi's account. It has restricted it to do any business with clients. So to that extent, SEBI has done what it could at an interim stage until the, results of the forensic audit are out.
That's going to be the key thing to watch out now, what comes out of the forensic audit.
Forensic audit, and also I think banks will have to show, I suppose, before the appellate tribunal that there was no way they would have known, and this is the diligence they did before they lent money to Karvi, and even after all of that, Karvi managed to present let's say falsify the evidence, and this is all hypothetication. We don't know if any of this happened, but these are probably the facts that would get argued now before SAT.
All right, and we'll keep getting you all those details. I'm sure Paismani will be updating us. Thanks a lot, Paismani, for joining us and taking us through what's happening with the Karvi case. But shifting focus back to markets, we're at day's low, 11,968, which is below the 20-day moving average as well. And Nifty Bank is sitting with cuts of about over 300 points at 31,530. Good time to bring in our techies on board then. Amar Singh of Angel Broking joins us on the show, and we've also got Sacchitanand Uttekar of Tradebulls. Good afternoon to both of you, gentlemen. Sacchitanand, let me begin with you. With today's fall, do you use this as an opportunity to create long position, or do you stay away from the markets for a while? This could be a phase of near-term correction that we are seeing.
Good afternoon. In fact, already since last 3 trading sessions, we have seen a meaningful correction in the market. And if you look at Nifty, it is now looking very steady near its support zone of around 12,000, 11,940. So if you look at the short-term averages, the 20-day exponential moving average is also resting near to this particular support zone itself. So definitely, it's a very good level wherein if in case if someone is short, they should try to cover their positions back. If you look at the trade setup right now, we are expecting that the market should rebound in a day or so, and we may again see the levels of around 12,040 on the Nifty spot. So with that intention, a long trade can be initiated in Nifty. The stop loss for the trade should be placed at 11,940.
Okay, Amar, what about you? Would you take any fresh bet at current levels?
No, not at the current levels, and as I had mentioned earlier also that we definitely were seeing bearish divergence on the charts, which is being reflected in the some sell-off which is happening in Nifty and Bank Nifty. However, what we are seeing is that Nifty definitely, if you look at the weekly charts or the monthly charts, they continue to be positive. On the daily charts, there is some selling pressure which is there, but we'll have to watch out how Nifty behaves around 12,940, 950 zone, because that's the next crucial technical support zone for Nifty. So there could be some temporary respite and we could see a pullback. But whether that pullback will last or will it take out the recent highs, that's something that we definitely need to look at given the daily trends. On the upside, I would say Nifty futures has got some resistance coming around 12,115. Looking at Bank Nifty futures, also, we are seeing some selling pressure coming in today, almost roughly around 1% correction today. So Bank Nifty futures has got very strong support coming around 31,300 odd levels, whereas the resistance on the upside is around 31,950, 32,000 levels. So ideally what's likely to happen from an intraday perspective is that high levels will be sold into, but these technical support levels are very crucial, so we could witness some bounce back. But whether they hold or not, that we'll have to watch out for.
Okay. Let's talk individual stocks then. And what's the stock that you're liking this afternoon, Sacchitanand?
Well, I'm liking two of the large cap stocks. One is TCS. So if you look at the overall structure, we have already seen a smart recovery from day's low. And if you look at the broader structure, the stock had been in a lower top, lower bottom sequence since last 4 weeks. Now, this is the first time of an engulfing bullish kind of an environment getting created on the daily scale. And this particular pattern is occurring at the retracement support. So basically what we're expecting is that this support of around 2040 should hold on, and probably the stock could again revive back to 2100 levels. So the stop loss for the trade should be placed at 2015 when it comes to spot levels, and an expectation of a move towards 2120. So long positions can be added in TCS on a fresh note. And the second call is also on the long side, which is Hero MotoCorp. If you look at the overall structure, definitely it has been on the weakening side. But if you look at last couple of data points and especially yesterday's data, there's a good strong evidence of a positive divergence which is getting occurred on the RSI. So we are expecting that this lower bound which is placed around 2400, this may act as a support in the days coming forward, and a recovery back to 2500 could be seen in a very short term on a very short term basis. So the stop loss for the trade should be placed at 2390, and long positions should be deployed in Hero MotoCorp. The overall target that we are expecting is somewhere close to 2500.
Okay, Amar Singh, what is your stock idea for the day?
Say there are two stocks, one on the long side and the other on the short side. So the long side is Kotak Mahindra Bank. This is one stock, if you look at today also, it's trading positive though marginally. And technically what we are seeing on the charts is that the stock is inching higher. Long-term trends are extremely strong. Intermediate and short-term trends, I would say they're not as strong as the long-term trend, but they are definitely positive. So Kotak Mahindra Bank is one can look at. Currently is trading around 1638, 1640 levels. So any pullback towards 1630, 35 ideally can be used as a buying opportunity with a stop loss of 1590 and a target of 1696 on the upside. And the second stock to look at is TVS Motors. That's on the short side. What we are seeing here is that this stock is definitely positive on the short-term charts, but it has moved from the overbought territory, and also the long-term charts, it witnessed some selling pressure. So this is one stock one can look at going short. So any pullback in the stock around 455, 460 levels. So currently it's around these levels only. So around 455, 460 ideally can be a shorting opportunity with a stop loss of 469 and a target of 435 in the short term.
Okay, those are some stock ideas that you need to keep an eye out on with regards to trade in the very short term. Bajaj Auto is doing okay for itself. 3,228 is where it's currently trading at, and TCS has come back 1.77% higher this afternoon. Dharmesh Kant of Indian Nivesh Securities is also joining us on the show. Dharmesh, wish you a very good afternoon. Let's talk about the market mood. It seems like there is a little bit of a risk of trade right now, but as always, is this period of slight uncertainty and caution an opportunity?
Good afternoon. I don't think opportunity is there as of now. It's more of a caution and profit taking which is happening in the market, and this sell-off may extend a bit post the RBI policy announcement. So we may get a in between a bump up in the market before the policy is done. But what is concerning is if they do a rate cut this time around say 25 basis point is what the STT is working with, then there won't be any further elbow room for the market for any policy measure. So you have done everything. You have done the policy initiative, you have done the monetary policy, you have done the tax reforms. Everything has been, I think, whatever arms or ammunitions which was there with the government, or tools were there with the government to play with, they have done with. But the economy on the ground level is not picking up the way it should have shown. So that is the concern, and that is why the risk of trade is happening as of now. And I do think December would be a very difficult month for the market to negotiate with. So what we have been recommending to our clients is to take at least part profits and be liquid as far as 30 to 40% of the portfolio is concerned.
Okay, that's the view in the markets. In fact, profit booking is something that we've been witnessing for the last three sessions after both Nifty Bank scaled to record high levels last week. But one pocket which has been doing well, in fact, this year itself, you've got the shoe companies registering good gains, be it Bata, which has been trading with some bit of gains. In fact, despite of markets being lower, this one's going up in good amount of volumes as well. And there you go on the screen, the white line is projecting today's volume vis-a-vis the average volumes of last 20 sessions. Just looking at the data, 30% of the traded quantity has been marked for delivery, giving you a signal that there could be cash-based buying which is coming into an expensive stock like Bata. Not only that, on the future side, there's no major build-up. So Dharmesh, coming to you, it seems like from the trading data there is some buying emerging in Bata, but look at Relaxo as well. That too has given you returns of nearly 50 to 55% so far this year. Do valuations, of course, may not give you comfort in Bata, but as a business overall, shoe companies, would you be a buyer in any one of them?
No, not really, because see, post the earnings announcement of Bata, the stock already corrected over 10%. And now today we are seeing some kind of a buying happening out there, but I think these are marginal traders who are doing just for a chance buy kind of a thing. I don't think at our 60 plus P it's still trading at. And if you look at the last 5 years trajectory of Bata as far as top line is concerned, it's not even grown at a CAGR of more than 10%, and even the PAT was around 8 to 9% with margins so low. So what they have done is the margins were extremely low, which has improved of late, and because of that operating leverage play, they have been able to clock around 8-9% kind of a CAGR on PAT. But management keeps on announcing all different products, but these are just to maintain the current level of top line. There's nothing been exponential or even good growth on the top line. So I do think this segment is itself saturated. There's not enough market to expand this segment, and with competition from overseas, as more and more brands come into India, it will be difficult for Relaxo or a Bata to expand their market share further. What best they can do is just contain with their current market share and the run rate which they are doing. So any bounces out here would be a sell for me.
Okay. That's the view on a couple of these footwear companies, Bata and Relaxo. The other space, Dharmesh, which is in focus is the metals pack. The Nifty Metals Index, of course, is your top sectoral loser. Of late, we were seeing traction coming back in these steel companies on account of price hike. Even globally, you had players like US Steel, ArcelorMittal increasing prices, production falling in China. All this was auguring well. But again, looks like the trade war fears are back to haunt this sector. Steel companies are correcting today. How would you approach the steel companies now? Would you take a bet at these lower levels?
Yeah, but definitely I do think a staggered manner of buying approach can be done in metals. Though if last 1.5 year trajectory, if you look at, whether it is steel company, ferrous, non-ferrous, or even global ferrous, non-ferrous, all metal companies. So what the trajectory has been, small bounces are there in the as far as per share price is concerned, but eventually they come down, and so has been the fundamentals. Even the earnings have not matched up to any expectation, and it has been a slowdown in global growth. Decelerating is the main culprit out there. Trade war is the fears is always out there, and any news flow on that count does have a big spike down or spike up coming into the metal place. So fundamentally, as far as steel companies are concerned, yes, there has been some slight price rise. Not only in India, overseas as well, but it's not confirmatory of the fact that actually demand has gone up. If the very fact that you said that China has done the production cut, so the supply has been squeezed rather than actually demand coming up in a big way. So that is the caveat out there. But the valuations do look compelling. Maybe domestic steel company JSW Steel looks pretty attractive to us, and maybe on a non-ferrous side, Hindalco looks very appealing at current price levels. So being optimistic down for say next 6 months, and we hope that things will resolve on the global front in favor of world economic growth. So these companies does offer you a value buy. So the top two picks would be JSW Steel and Hindalco. I would prefer to stay away from Tata Steel because of its inherent set of problems of the European exposure.
Yeah. Anything else, Dharmesh, that you in particular like from a slightly long-term perspective?
Yeah, PSU banks. So that is the area where we are buyers on corrections. We are not chasing the rally. So what we have been doing for last couple of months is a staggered manner of buying approach, and in a slow and phased manner. We do think that going forward, the Q2 was much better than what was Q2 year-on-year basis, and Q3 would be a far better, and going forward Q4 as well, because some NCLT resolutions have started happening, and NPAs have started getting reversed. So the book entry will be reversed in most of the banks, which will add to the profitability in a big way. So there, like Canara Bank, Bank of Baroda remains the topic, and maybe from a slightly mid to small cap segment, Indian Bank looks pretty attractive to us. SBI has been everybody's favorite, but the stock price has run up quite a bit, so we are avoiding that. But yeah, we are focused on Canara Bank, Bank of Baroda, and Indian Bank. From say 6 months perspective, we do think things are going to turn around in favor of them.
Okay. A few other stocks that we'd like to talk about. One is the Max Group stock. So Max Financial now is at 522. The last 1 month, the stock has gained about 29%. Max India, on the other hand, has also not done badly. In the last 1 month, it's up 13%, not as much as Financial, but still looking strong. Max Ventures also the other one that you should look at. These three stocks thereabout. In the last 1 month, Max Ventures is up 15%. Sacchitanand, any of these names, any of these three stocks?
Well, Max Financial, in fact, has been on our radar. In fact, the way it has breached above the 500 mark, which was acting as a very stiff resistance, and it has been sustaining above it very smartly. So probably the headroom is now open right up to say 576, 578 kind of a zone. So definitely the stock should be bought from a short-term perspective. The stop loss for the trade should be now placed at 504 on a closing basis, and long position should be considered in Max Financial.
Okay, that is Max Financial at 523 now. Dharmesh, we'll let you go on that note. Thank you very much for joining us. On to another stock and the story behind it. The Supreme Court has refused to grant JSPL any relief on the end use of iron ore extracted from Sarda Mines. The steelmaker had hoped to get approval to sell the iron ore to other players. The apex court says it will decide on the issue in January. Joining us right now to talk about the impact of this decision on the projected revenue growth is the company's MD, Mr. VR Sharma. Mr. Sharma, thanks very much for taking out the time. Is this indeed a big setback for you?
Good afternoon. First of all, Supreme Court has not given any decision today, and I would like to correct the picture in a clear way that Honorable Supreme Court has given the next date to hear this case, that is in the second week of January, after the holidays and vacations. So the issue is, we were requesting to Honorable Court and Government of India to allow us the material which belongs to us. We have paid the money, we have paid the value of the material, and we have also paid the duties and taxes, royalties, etc., everything. So ours is a legitimate right on the material. The material is financed by Indian banks. So this is financed for JSPL, and we are incurring the interest on the finance. We are bearing the interest cost. So it is basically our material which is lying in the premises of SMPL, Sarda Mines. And this is what we wanted from Honorable Court, this relief, to please allow us to use this material in our pellet plant, which is very near to these mines. So Honorable Court has listened us very carefully, very patiently, and they told that, of course, the materials must be used. In the meantime, the state government had some different view. There is some objections stating that this is from the illegal mining, but there is no illegal mining because nothing has been produced after the environment clearance date was over. So the mining was done by SMPL during the validity of their lease and validity of the environmental clearance. Therefore, here the question is, when the material is already royalty paid, and this is in the knowledge of all of the departments of state government, and the revenue has been deposited not in one day, it is a matter of more than 2-3 years, because so much of material cannot be produced in a day. So the duty is paid, royalty is paid. So
Sure.
this material is a very legitimate material.
No,
And
Mr.
this is
Sharma.
what our request was. So Honorable Supreme Court, after listening both sides,
Sure.
decided that we are not giving any interim decision, or we are not holding or reserving any decision. We will rehear it in the second week of January 2020.
If the matter is crystal clear, Mr. Sharma, did the Supreme Court have any reservations, particular reservations because of which they did not pass the order today? Because they've refused to pass the order, as you said. It's not reserving of judgment.
Yeah, there is no reservation of the judgment. See, though the matter is judice, it is not possible for me, but
Okay.
I can only tell
If
you
it
one
doesn't
thing,
fall,
that the decision is not yet taken,
Yeah.
and the matter will be heard again in the second week of January. It
Got
is
it,
like
sir.
an extension of the date.
Right.
So you know what happens, all of a sudden so many things they come up and the people try to interpret in their own way. So that's why in the morning hours there was a big confusion.
Sure,
But
okay.
now it's all settled. There is no issue. We will be again putting our case to Honorable Court. Our legal department, our lawyers will be making an appeal on the next hearing.
Right,
And I am confident we will get this material. There's
Okay.
no problem.
So in the meantime, you also said that the state governments, said that there was a case of illegal mining that was happening there. So is there going to be, between the period that the Supreme Court makes this announcement, are there going to be other hearings where the state government will present its case?
Yes, everything is in paper. Everything is crystal clear. The mines were closed, I think, March 2014, and the material is produced before March 2014. So there is no question of any illegal activity. It is interpretation. How do you interpret? So I think the state government will definitely work on this, because sometimes people take this stand and then there's a review process always. So, and this is the democracy, and this is what the legal system in the country. Everyone has a right to speak.
Sure.
So there is no problem. I think the material is duty paid, material is royalty paid, revenue is deposited in the account of state government, and as per law, Government of India law, if any mines are closed or stopped or whatever the reason may be,
correct, Mr.
so
Sharma.
the user is allowed to, and also the miners are allowed to clear their stock,
Correct.
which is lying in the mines, and they are given another 6 to 7 months' time to clear the stock.
Sure.
So,
Just one clarification, Mr. Sharma. Since the next hearing is next month, in the month of January, there is a fear in the market that because you've raised funds on account of this iron ore that you've already purchased, can there be a case where the banks sell this iron ore because the quality will deteriorate? It's just lying like that.
you see, here the point is, first of all, it is not an auction or it is not something like liquidation that this material belongs to a particular bank or consortium of banks. This is a material not owned by bank. This material owned by JSPL, and whatever financing has been done, we are paying the interest to the bank all through. So there is no default from our side in that matter.
Okay, fair enough.
So when we are paying the interest, the interest cost is on us, interest burden is on us. The royalty is paid already to the state government. So it is a very, in our view, it is very crystal clear matter.
Right. So you're suggesting that in the near term,
SMPL has gone in some kind of embargoes, but why JSPL's material is not allowed to come out? So our request to the Honorable Court and government is only one, that please allow our material, which is already duty paid, royalty paid, it is financed by the Indian banks. We are incurring the interest every month, every day, every month.
Right. So you are suggesting, Mr. Sharma, that in the near term, at least till the hearing takes place, bank cannot use this iron ore which is lying right now, and they cannot sell it in the open market. My last question, it's away from this issue. Has the company received expression of interest for Gare Palma block? If yes, when do you commence operations from this block?
So far, Government of India, Mr. Mines, have not sent us any confirmation. I think maybe because now Parliament is going on and most of the government officials must be busy in the Parliament affairs. I think maybe by the end of this month, we are hopeful we will get the letter. I think it is a natural process. Government, there are very senior bureaucrats sitting in the government. I think they must be working as to how to hand over the mines to the highest bidders.
Mr. Sharma, one final question. Should this, for whatever reason, should this verdict not go in your favor, what's the impact then? I'm talking about the Sarda Mines verdict.
I will. I understood what you are telling. You see, there are two things. The material is in place, and it has a value, and this value is today borne by whom? All interest is being paid by JSPL. The duty is, the royalty is paid by JSPL. The material cost is paid by JSPL. And that's why when it was legitimate, everything was, due diligence were done, that's why it was financed. So it is our material. So first of all, we have full trust in Honorable Court. We will get the justice and we will get our material. So we are not thinking on the second option now that somebody else will come and pick up the material. I mean, it is not a liquidation case. It is not something that we are unable to meet out the obligations, our interest obligations or repayments to banks. It is not that question. So, and what the bank will do with this? When we incur the material cost, we have paid to SMPL, to Sarda Mines, the cost of the value for the mine, value for the fines and iron ore, whatever is lying. We have paid the duty, royalty, everything we have paid. We are paying the interest. Then, with a natural justice, we should get this material. I am not thinking that we will not get this material. It is our material. We have paid for it and we will get it. This is what we believe in. It is
Well,
there is a system working in the country.
Okay.
There is a constitution in the country.
Sure.
There is a law in this country, and law will definitely give this material to us.
Okay, we hope that happens. Should that not, we'll probably try and talk about what the impact is then, Mr. Sharma, since you said you haven't quite factored in. All the best.
We see what will happen.
Yeah, no, I agree, Mr. Sharma.
Yeah.
Oh, no, all I'm saying is...
Whose favor it will go?
True.
The question is that.
Yeah, but still...
The state government cannot take it. It is not something unidentified property.
Agree completely. But since it's in a court...
Who will take it?
Since it's in a court and you don't know which way will shape up, but we do hope that the right verdict comes out. Mr. Sharma, all the best, and thanks so much for joining in and clarifying all of those points.
Thank you so much.
That's JSPL. They have to wait. The stock, though, is not quite waiting. Off the lows of the day, if that means any solace, but still down about 5% in trade. So there's a fundamental trigger to this. But Sacchitanand, if I were to get in just a quick technical perspective out here as well, because it's very difficult right now fundamentally to ascertain what will it do in the near term till the verdict is out. How about the charts? What do they say?
Well, it is rightly placed at the support area of around 140, and we have already seen a smart recovery from the day's low. If you look at the overall structure, the structure is still on the positive side. The higher top, higher bottom sequence is valid until 137 is not breached. So I think one should continue riding the trend, and I think the probable stop loss for the trade should be placed now at around 145, and one can take trading longs in Jindal Steel. If you look at the overall structure, I think this resistance zone is somewhere close to 165, and probably we may see this particular zone again getting challenged. So I think 145 should be the stop loss, and long position should be deployed again.
Okay. Well, let's move on. India's most valuable lender by market capitalization, HDFC Bank, is seeing signs of revival in the rural economy. It expects the credit demand to stay, even though it remains subdued for a period of time. It may remain subdued for a period of time. Antonio of Bloomberg News spoke to Kazad Bharucha, he's the executive director of the bank, and began by asking him about the factors behind the move.
There are certain initial signs of some amount of demand, coming back in certain pockets. We will have to watch whether that sustains. My sense is some of the demand is having a grounding in being a little more sustainable. If you look at semi-urban and rural India, what we have seen in the last month of October and some part of early November, on the back of some good monsoons, and therefore rural India largely being the agri economy. So we've seen some shoots there. I think those are a little more sustainable.
Mr. Bharucha, you mentioned about certain shoots which you are seeing in both in the investment and the consumption side. How is HDFC Bank positioning itself to benefit from this?
So let me look at the corporate side, and we are seeing, given our engagement with the corporates across a whole range of products and services, we are seeing better engagement. We are seeing level of increased drawdown on our working capital lines, and some amount of brownfield capex that is taking place. So we're well positioned out over there. We do see a large engagement continuing on our transaction banking platform, and we've upgraded that platform on the cash management side, and also the various changes that we brought about on the trade platform. So with a higher level of customer engagement, both on cash, trade, and on the funding side, we've seen that come through well. On the retail side, as I said, we've seen our book stabilize, and in some of the areas where but overall we've done very well. We've also seen some amount of growth come in through our semi-urban and rural India, which argues well. So I think we are well positioned to service these opportunities which have presented themselves, and improve our further product engagement on our existing customer base, as well as acquire new customers through the entire technology platform through which we deliver both on the wholesale and retail side.
You said that you're cautiously optimistic about the economy. What more can be done to bolster the confidence in the economy?
So yes, one is the change in dialogue, which one has started seeing off late. So if you ask me, was it really there 4-6 months ago? I would certainly say there was a sense of pessimism, which has now changed to a little bit more of corporates being optimistic. So when I go around and I meet captains of industry, CFOs, they're very clear in their dialogue as to their plans and what they've set out to achieve, and how they are ensuring with a little bit of moderation to attune with the larger environment. But on balance, they are in positive territory. So that gives you a good sense of how the larger wholesale part of the economy is looking at performing. And there has been a set of these measures which have also come in, which has helped change the mood to a certain extent. But we will have to be patient as it moves along this path.
All right, so finally, some positive commentary there with regards to the rural pickup. Let's see how that shapes up over the next few months to come. But also, let's find out what has made it to Sharad Dubey's list of the Fab 4 stocks this afternoon. Sharad, good afternoon.
Good afternoon, Devina. The first stock is from the realty space. There's no guessing for it. The first stock is Prestige Estate Projects, which is up more than 10% today. It is hitting its all-time high levels today, and also the biggest gainer in the Nifty 500 index. The stock has also rallied more than 20% in the past 5 trading sessions. Up next is Max India, which is up almost 2.6% after IRDA actually approved the deal to sell a 51% stake in the Max Bupa to Fettle Tone. So Fettle Tone is an affiliate of True North Fund. And the next stock is Torrent Pharma, which is up almost 2.3% after fresh longs were seen with a high open interest of more than 37%, and the volumes trading at almost 2 times its 20-day average. And the last stock of the day is IFCI, which is up almost 1.4% after the company stated in its press release that it has received bids for selling its stake in NSE. The company is having almost 2.44% stake, or roughly 1.3 crore shares. So these 4 stocks are actually buzzing in the space today. Back to you.
All right, Sharad, thanks very much for that. So those are the Fab 4 stocks of the day that you need to keep an eye out on. Avinash Gorakshakar of Joindre Capital Services also joining us in the studio this afternoon. Avinash, very good afternoon to you. Let's talk about what the approach is now.
I think, Devina, clearly the markets were looking at some sort of a moderate correction, and I think clearly with the credit policy now lined up for Thursday, I would believe that the action could get shifted onto the financials and the banks. Our sense is that despite the fact that the market has discounted a 25 basis cut, the commentary from the governor would be important, and clearly markets are also looking at some sort of further incentives and some further announcements from the finance ministry. My sense is, I think the markets could possibly get a little bit of defensive, considering the fact that there has been clearly a demand slowdown across sectors. So I think it's now time to look at some defensives, like the ITs or maybe the pharmas, and specifically the pharma sector, where we've seen pretty good numbers coming in for Q2, especially from players like Sun Pharma, Torrent Pharma, and today's announcement of Biocon, which actually I would believe that any dip should be used by investors to actually look at this stock from a longer term perspective, because earnings are definitely going to trickle in over the next, say, 12 to 15 months.
Okay. Some of those pharma names like Biocon, though, one would have anticipated a slightly bigger move, but ahead of the announcement yesterday, I think the stock had pretty much run its course. Stocks at about 287. That's actually, Amar Singh, come in on Biocon, Sun Pharma or Aurobindo Pharma in terms of a trade.
Yeah, looking at Biocon, what we are seeing here is that Biocon is trading positive for the last few days. Today, I think it is witnessing some correction. However, if you look at the charts on the monthly charts, it clearly shows that upside towards 305, 310 levels, there could be some selling pressure and resistance. So ideally, anyone long should look at booking profits because we could see some profit booking in Biocon towards 270 odd levels. And talking about the other stock which you mentioned, Sun Pharma. If you look at Sun Pharma, what we are seeing here is that Sun Pharma has been correcting for the last few trading sessions. And it appears that it does have some strong support coming at around 410, 420 zone. So it's more of a range play in Sun Pharma, 450, 460 on the upside and 410, 420 on the downside. And also technically, if you look at the long-term charts of Sun Pharma, the monthly charts clearly shows that it is the stock is in for consolidation.
Okay. Now, just a stock that we should focus on a bit. We've already focused on it enough for the last few days and even the show. Yes Bank, 2.3 million shares change hands. It's not a very large one, but we mentioned that already. But it's now down 7% and it's trading at the lowest point of the day is Yes Bank on very high volumes, both on the cash side and I presume on the futures side as well.
That's right, Neeraj. In fact, we've been highlighting the futures of Yes Bank. They've been trading at a discount. And I just want to mention when the fundraising news came in on October 31st, that day the futures low was around the same price, 55 or 55.7. We've already breached that mark that we had seen, at least on the stock future side, on October 31st when the announcement came by. Not only that, remember at the start of the show, we highlighted the stocks likely to enter into the F&O ban. And as per the current data, I think the total open interest as a percentage of market-wide position limit has already hit 105. And for a stock to enter into the ban, it has to cross the 95% mark. And this goes without saying, when the futures are trading at a discount, this is clear sign of shorting which is coming by on Yes Bank. Avinash, your thoughts, what should one do with this counter?
No, I think, Navneet, my guess is I think until we get a little more clarity as to when the funds are going to come in, clearly the profile of the funds which have shown interest have been a little bit doubtful, and I think the markets are also clearly worried about the impending equity dilution and obviously, the kind of incremental benefits which would come in. I would believe that, not only FY20 but even FY21 could be a tough year for Yes Bank, and in terms of the ROA as well as the ROE, I would say that you could see some respectable numbers only coming in by FY22. So it's going to be a long road ahead, despite the fact that even after Yes Bank manages to get this kind of capital. First of all, the deadline has been said that by March they are hoping that the money would come in, but hopefully if it does come in also, I think it's going to be a lot of grind before this stock actually gets re-rated.
The markets have been really wary of the sort of investors who've come on board.
No, just a point there. I mean, now that it probably would be in the ban period, any additional negative news with regards to Yes Bank will prohibit traders from going short.
So what happens when a stock enters into the F&O ban? You can definitely do intraday trading. If you don't cover your position on the derivative side, you have to pay a penalty to the exchange. So no fresh open interest can be carried forward. And if you do that, you have to pay a penalty to the exchange. But usually brokers are cautious to allow their clients to create
go for the short.
To create any fresh position into the stock on that very day, be it long or short. But the signs are clear, 17 to 18% build up yesterday. Of course, we saw the market reaction to the news as well.
And this is a surprising part because, Yes Bank, even before the news came out, I mean, this is just, something that when I was talking to a few brokers, they said that it is a bit like before the news came out, the stock went into the ban period. And then now, in the last few days, you've seen the kind of accumulation that the stock has seen and pushed it back into the ban period. So I don't know whether or not this...
Yeah, the positioning is interesting. I think yesterday somebody was pointing out on social media as well the strikes on which the call and the put options are being taken as well is pretty interesting. So there's lots that are happening out here as well. I think certain articles about as we said, the nature of the investors, I think we put it out as well. It wrote out the copy as well the day after the investors came in that doesn't inspire confidence, and the brokerages were also of that verdict.
In fact, you'll be surprised that
this is the biggest event. I'm just saying that the biggest event that everybody was watching out for, and if the reaction of the stock is a 20% downtick over the next 3 days, that tells your story.
Yeah, and this is coming at a time when even the margin requirement for additional position, if you surpass the exchange mandate of open interest, I think the exchange had come out with a notice that the margin requirement will be 50% on the derivative contracts of Yes Bank, which is really on the higher side for a stock.
So if any other skeletons come out now,
so maybe clients are willing to park that sort of money with their brokers.
And well, you never know. Hopefully, some positive news come out for Yes Bank over the next few days, and that might also help.
It's just balance.
Yeah, you never know. I mean, hey, they're trying their best, I'm guessing. But let's wait and watch. You know, the other set of stocks, just before we get in what dealing rooms are recommending in the session today, and I want to get a technical perspective out there, not a fundamental perspective, a technical perspective on the Adani Group stocks. We've discussed some of them, but today seems to be a day of profit booking there. Amar, any of those names that you would be comfortable taking a trade on?
Yeah, looking at Adani Group stocks, I would say that Adani Ports is a stock which definitely we are seeing some selling pressure there. And also today it has corrected significantly by almost 4%. So this is one stock, any pullback can be used as a shorting opportunity because if you look at the weekly and the monthly trends clearly shows that there is further downside, and also it has taken out a crucial support zone which was somewhere around the current level. So Adani Ports, any pullback can be used as a shorting opportunity. It has now got good resistance coming around 380 levels. Sustaining above 360 levels, it could trade all the way towards 335, 340 levels.
Well, down almost each of these names, almost all of these names today have shown a bit of profit booking. The strongest name to the one which has consolidated the last few days have all come off. So a day of profit booking certainly for these names, for the market as well, but for the Adani Group stocks in particular. Let's find out if they make it to the list of what dealing rooms are recommending in the session today, or is it an entirely different set of stocks. Yatin and Darshan are here with their channel checks. Good afternoon, both of you. Darshan, let's start with you first.
Yeah, so one of them does feature. The first one that I want to speak about is NMDC in a rather weak market today. Some bit of accumulation is seen at lower levels in NMDC. Dealers indicate that some of the domestic mutual funds are active, very strong volumes, almost 10 million shares have already been traded on the counter. So I don't know if some news is anticipated, but some of the funds have been rather active. Torrent Pharma over the past few days has seen rather good accumulation. It's up another 2.3%. Of late, the company has been meeting a lot of analysts and a lot of investors, and the views that they've given is on the positive side. So that's something that is rallying. And Adani Ports obviously is down almost 4%. Over the past few days, a lot of long build-up was seen on the counter on the anticipation of exhaustion of the block. Capital had sold in almost 1 crore shares, but dealing rooms do indicate that another 2 crore shares are yet to be put on the block. That was supposed to come in over the past 1 or 2 days, but that has not happened, and that is why, because of that not coming in, a lot of positions that were built on the long side are now getting unwound in Adani Ports, and that's one of the key reasons why Adani Ports is down almost 4% today. But Yatin has a few more stocks.
As far as Max Financial is concerned, some interesting trends here in the future and option segment, long build-up seen, and today also there is fair amount of price action on decent volumes. So watch out for this stock. Dealers have been aggressive buyers as far as this insurance name is concerned. 527, almost highest point of the day. 24 lakh shares traded already in the cash market alone. Z Entertainment, the stock has corrected significantly from the recent levels of 350 post the block deal, and in general, it's trading almost 7-8% lower than the recent block deal price of 304. Dealers do indicate a buy on dips kind of a strategy. They do believe that the stock will cross 300 rupees in the next few trading sessions. So buy on dips is something that dealers are indicating as far as Z is concerned, given a tight stop loss. And Mindtree is one stock in the IT pack wherein domestic funds are said to be buyers in trade.
Right, Yatin, thanks very much for that. That's the dealing room check this afternoon. Look at Z. Z is down 4% now, and that stock also continues to grind lower. No light at the end of the tunnel despite getting investors. It just, it's such a fearful market with regards to, what happens when top management, gives up. And what kind of new information will come out on the back of that? That's probably keeping the street a bit nervous around Z. But Avinash, a quick take on what happens now for Z.
No, I think markets are clearly waiting at some sort of, hopefully a new management team, and hopefully, now obviously the kind of strategy the management puts in. I think with the 5% stake, Devina, it is very clear that in future, obviously, this becomes a prime takeover candidate. But I think in the near term, markets would be clearly looking at how the operating metrics would perform. In fact, in the second quarter, the markets were clearly concerned that operating cash flows had turned negative, and the markets were obviously not happy about it. So I would believe that, the markets could obviously get some sort of relief only if they see some sort of operational improvement in the numbers first. And then I think the focus would again get back into who would be the new, management and what kind of strategy this company takes on, because the pledging factor is now completely out. I think the markets would now look at the earnings growth momentum and how the company performs going forward.
Dish TV is the other one. Sacchitanand, is there a trade here on the short side?
Well, Dish TV, I think the stock has been on a weaker trend, and if you look at the overall structure, it continues to remain weak unless it does not close above 14.5 from here on. On the lower side, it has some swing support at around 10, but I think eventually we may see lower levels close to around 7.5 is what I believe according to the pattern. So 14.5 should be the stop loss in case if someone really wants to trade Dish TV, and clearly it should be with the trend and on the short side.
Before we get to the closing strategies, pull up ICICI Lombard. Suddenly there's a spike which has come in that stock in last 5 to 10 minutes of trade, and the data which I can check on the exchange, almost 80% of the traded quantity has been marked for delivery, giving you a sense maybe there's some cash-based buying taking place here. And of course, on a day when markets are trading lower, you tend to see these insurance companies doing well. So be it HDFC Life or even SBI Life, both of them are trading with some bit of gains. All right, having said that, let's get you some closing strategies from our technical experts. Sacchitanand, over to you first. Any BTST or any STBT for tomorrow's session?
Well, from the similar line, ICICI Prudential is something which has been on my radar. So if you look at the overall data set, since last 9 trading sessions, the stock had been oscillating near the 500 mark. And if you look at the put action, 500 has been a very strong support. If you look at the overall structure, even on the RSI, we are seeing a positive crossover, and the value has jumped up to 54. So I'm expecting that there could be a breakout soon in the coming session itself. So the stop loss for the trade should be placed at around 500. And the pattern that we are looking at is a kind of a contraction triangle, which has a which has the targets which are placed somewhere close to 514, 518. So with a stop loss of 500, long position should be added in ICICI Prudential.
That's the only insurance company in the derivative space right now. Amar Singh, what about you? What's your BTST or STBT?
Yeah, I would say that one can look at Indraprasth Gas IGL. This is one stock which continues to, I would say, be extremely strong on various time frames. On the daily, we are seeing some consolidation. But still, this is one stock. So any pullback in this stock towards 410, 415, ideally, that can be a very good buying opportunity for the stock, with a stop loss of 391 and a target of 447 on the upside.
Avinash, what do you make out of these gas stocks? Quarter 2 wasn't a bad quarter for them. Do you expect this trend to continue?
Yeah, I think if you look at companies like Gujarat Gas, I would believe that the third and the fourth quarter could equally be good. In fact, if you look at relative valuations, I think it definitely trades at fairly comfortable valuations as compared to an IGL or maybe Mahanagar Gas. So I think clearly within the gas space, Devina, there is definitely a decent risk reward. And I think in these markets, these companies are typically annuity-based companies with very strong balance sheets and cash flow. So I think it could be a reasonably good bet to bet on either Gujarat Gas or Mahanagar Gas. And I think longer term, I think, considering the kind of pricing these companies get, I would believe that these could be safe investment bets, even in volatile markets.
Okay. Godrej Properties has recovered from the lows of the day now. Actually, it is bumped into the green. So after the entire period of, trading absolutely flat, it's up 1% now. So that's not bad going actually for Godrej Properties. 902 is where the stock's trading. Although it's not really done a whole lot much in the last few months, even 1 month, in fact, it's been down about 10-odd%. Last 3 months, it's been absolutely flat. Last 6 months, it's not done a whole lot. So post its quarter 2 numbers, actually, that's the time that this period of lull actually started for Godrej Properties. It touched about 1100 odd. From there, came down to about 850, now struggling around 900. Amar Singh, would you take a trade on Godrej Properties?
Yeah, looking at Godrej Properties, see what we are seeing is on the daily charts, there is the stock definitely has got very good support coming around 850, 860 odd levels. But again, on the upside, it's unable to breach the 950, 920 zone. And also, if you look at the stock, technically on the weekly charts, the stock is in oversold territory. So there is a possibility that there could be a bounce back. But sustaining that isn't going to be easy. So high levels will be sold into anywhere between 920, 930. That could be a level where it could be sold into. Short term, yes, there could be some upside to the stock.
Okay, that's Godrej Properties for you. Pull up Prestige Estates, and remember the stock's been buzzing after inking a deal with Marriott Hotels. The stock today is up 7 to 8%. If you could just pull up the last 7-day return, I think that's going to throw a better picture. There is buying emerging almost every single day post that announcement. 7 days, the stock's up 20 to 21%. Avinash, your thoughts on this one, on the deal and prospects, growth prospects for this company?
No, I think definitely, the deal is interesting, and I would not be surprised that, hopefully once the deal is finalized and some execution happens here, I think clearly, the market has sensed that this could be a kind of a good incremental addition to the portfolio. And obviously, these numbers could get reflected not immediately, but at least in the coming year. So I think, obviously, despite the fact that the stock has run up, Navneet, I think one could definitely look at it from a longer term perspective.
It's been quite remarkable the kind of gains that this stock has made over the last 2 days between Prestige Estates and Phoenix Mills, Avinash, if you were to choose one real estate name. And why?
I think clearly Phoenix has got a much more good rental model, and I think in terms of the vulnerability to the real estate market, I think Phoenix would definitely qualify as a more safer bet if somebody has a long-term view on the real estate pack, because these are companies where the mal and the rental income actually is fairly sufficient and large enough. So I would believe that despite the fact that even Prestige has got several growth triggers left, somebody who's a slightly conservative and a long-term investor could probably prefer Phoenix.
Okay, very quickly, 30 seconds. Would you buy a Bharti Airtel today? It's come off.
I think yes, Neeraj, considering the fact that most of the companies, especially Jio as well as Bharti, have announced significant tariff hikes. I would believe that at least for the next 1 or 2 quarters, these companies are going to hang on with higher tariffs, despite the fact that data is now going to be extremely expensive. So one would have to wait and see how this strategy works out. But definitely, the ARPU increase is going to be more beneficial for players like Bharti and Reliance Jio. I think Vodafone may not be able to get the maximum benefit, considering the fact that it's lost a lot of subscribers in the last 2 to 3 months to Jio. So clearly, I think if one were to look at the next 6 months, I think I would not be surprised. One could see definitely a good momentum in Bharti Airtel.
Okay, we will leave it at that, Avinash. Thanks much for taking the time out and being with us. Bharti certainly recovered significant lost ground in the session today. Sacchitanand, you want to comment on the charts? If we haven't spoken about this already, the late 1 hour pickup that we're seeing in Bharti, how does that look for a trade?
Well, it's certainly a very interesting chart structure, and if you look at today's spike, what has happened is it has taken support near its 5-day exponential moving average, and there was a gap area which has been filled. So definitely, the long position should be retained, I think, unless we don't see a close below 452 from here on. I think the bias should be on the positive side. The expectation would be again for rebound back to say 480, 485 kind of a zone from where we saw some profit booking. So definitely on the long side, 452 should be the stop loss.
Okay, stay on, gentlemen. We'll start wrapping up the markets and then come back for a final comment. We're not at the lowest point of the day, which may qualify as a bit of a respite, but you never know. The Sensex, in fact, is ending as good or as bad as any other day, just about 0.27% lower, so not too bad. The Nifty about 0.4. The mid caps and the small caps have taken a bit of a stick. I think yesterday's session as well, they looked slightly vulnerable and the market breadth wasn't the most optimistic. In today's session as well, about 0.7 and 1% apiece for the mid caps and the small caps. So the breadth hasn't looked particularly great in the session today. And Navneet will speak about the broader end of the spectrum, but let me talk about the large caps first. Bajaj Auto 3% higher, Finserv about 1.5%. So the Bajaj trio, I can't quite see Bajaj Finance here. Maybe it's lost a bit of mojo, but it was in the green. But the Bajaj Group stocks are doing okay. TCS, Infosys, a bit of a bend towards the defensives today because TCS, Infosys, Kotak Bank, HDFC there, which are Bajaj Finance right here. Titan has some gains as well, marginal at that. What's not done well, and ideally arguably the stock of the last 1 hour, Yes Bank, 7.5% lower. In all probability will be in the F&O band today. Bharti Infra recovers a bit of lost ground. The last 2 days has corrected. Don't be surprised if it goes up tomorrow. But the metal names, Tata Steel, JSW Steel, Vedanta, and Hindalco, all of them have corrected in the session today. Last but not the least, Z Entertainment as well, 4.5% down in the session today too. So this one continues to face the bitter end of the stick. But the broader markets, more pronounced pain in certain specific pockets, Navneet.
That's absolutely right, Neeraj. And where you had a lot of losers coming by, market breadth was negative, but there were a handful of gainers also. Starting off with Somani Ceramics, the stock gained about 8 to 9% in today's trade. In fact, it was active on last Friday as well, when it gained about nearly 10%. So it's closing with gains of nearly 7%. Prestige Estates, we just discussed this counter with Avinash. It's up 20% in last 7 days. And today also the buying continued. It's closing with gains of about nearly 8%. Mastic was the other one. I guess in the second half of the session, there was some buying interest seen for this one. It's closing with gains of 4 to 4.5%. And we've been talking about how Max Group companies have been inching higher. So something like Max Financial, there's a lot of trading happening around the futures as well. In fact, when I last checked the data, there is a lot of concentration between few clients as well. If you look at the total open interest for this contract. Bata is the other one. Despite of markets heading lower today, it was a volatile session, but still the stock's closing at day's high, which is technically viewed as a positive sign. 3.5% gains coming in here. ICICI Lombard was the other one, where just in the last 45 minutes of trade, probably some buying came in, but it's petered off, I guess, closing just about flat. On the losing side, you had stocks like Tradebulls Housing, which was up in yesterday's trade, probably gave up all its gains today. That's closing with cuts of 4%. High beta counter on a day when market falls. Probably you'll see Indiabulls Housing also falling. PNB was the other one among the PSU banking banks, which fell about 4 to 4.5%. Indigo, I think right from the word go, there was some selling pressure seen for this one. And Bank of Baroda was the other stock. JSPL on back of that Supreme Court hearing, which is now in the month of January. No relief coming in for the company, 3% lower. And REC was the other one, which is closing the day with cuts of about 3 to 3.5%, 5% actually at day's low.
All right, so that's what you've got. A close, which is, I think, 1 point above 12,000. Remember, 12,000 was a psychological marker for the Nifty, but this is the last traded price. So we'll have to wait and watch to see what the actual closing price lands up to be. Nifty Bank loses about 0.75%. That's off the day's lows, but still closer to about 0.75%. Sensex loses about 110 odd points. Coming to the contributors then, and what's led to this fall on the index, what are the big bulk contributors? On the downside, it's HDFC Bank, Larsen and Toubro. It's basically banks, all banks, and the larger ones added. What's done well is the defensive IT pack today, and you've seen TCS pull up its stocks today. I think 1.8% high is what it shut up with, and Infosys contributing about 6 odd points.
It's after a while we're seeing IT stocks, heavyweight IT companies like TCS, Infy featuring there. Pull up the market breadth as well and tell you how the entire listed universe panned out with regard to trading happening on National Stock Exchange. There you go. It's almost 2:1, clearly in favor of the declines. And finally, participation in today's trading day on the F&O side and as well as the cash side. Whether the fall came in on account of high volumes or not will give you a picture whether more selling took place or it was on account of less participation as well. All right, we'll bring that later up for you. But on that note, let's start taking closing comments, Davina.
Let's start off with, all right,
we got it. 33,000. I think it is on the lower side, and F&O picking up towards coming close to their expiry, weekly expiry day.
All right. Sacchitanand, let's get in your closing comments first.
Well, when we started the show, the indices were trading lower at the lowest point of the day, and the recovery has been very much in line with our expectation. So if you look at the overall Nifty structure, as we have discussed, 11,940 would be a critical point from here on. In case if we see slippages below that, then probably we may see a deeper correction. But as of now, if you look at the 30 minutes or 60 minute structure, this looks like a zigzag or a flat correction which has just ended, and probably we may see this particular rally getting continued, and the expectation would be a move towards say 12,100, 140 within this particular swing. So definitely, I think the correction which set in, I think it is somewhere over, and probably we may see a good rally in the coming days.
Okay, Amar Singh, what are your closing thoughts?
Yeah, I would say that Nifty on the daily charts clearly shows that there is consolidation. But yes, on the downside towards 11,940, 950, that's a very strong support zone for Nifty. So we could see some pullback, but till the time we don't see trading consistently above 12,100 and 12,120. I would say it could be some range-bound trade. Hourly charts are also indicating that there could be some selling pressure at high levels. So it could be some consolidation ahead of the RBI policy.
All right, some consolidation ahead of the RBI policy. That's on the 5th of this month. Thanks, gentlemen, for staying with us this afternoon.
Thank you.
All right, and on that note, it's also a goodbye from Neeraj, Navneet, myself, and the entire team that's put this show together. Thanks a lot for watching. Market Wrap comes up next.